Good evening, everyone. This is Wayne, and this is the video version of the trade report for April 3rd, 2018. Well, the markets opened higher today, but it looked like they might get pushed down in an attempt to find those February lows. But the bulls really stepped up their game today, and then we'll just keep watching to find out more. All right, greetings everyone. Thank you once again for spending part of your day as we recap the action and activity in the financial markets for today, Tuesday. Well, I do like, as always, to start with the S&P futures, and that's where we begin again today. Just a reminder about yesterday's action, which I know a lot of you want to forget. I would say me included, but that would not be accurate because I do trade the markets to the downside when they provide me with the opportunity to do so. And when you see a trend in a market that is as definitive as this, well, that's a trader's dream. A definitive trend, regardless of direction, is really what all traders kind of look for on a daily basis. So, on a day like today, when you have a chop fest, and the market is really not giving you anything in particular or definitive until it does. You're just kind of sitting there waiting for an opportunity to present, and the opportunity did present. And we'll talk about that. That was in my tease in the intro. What happened there? But as we recall, yesterday we started the regular session with what we thought was going to be a push to the upside and possibly a little bit of a move higher, and then everything hit the fan and we just absolutely collapsed. Got a little bit of a buy into the close, which gave market participants a little bit of cause to pause, a little bit of a relief. And as it turns out, and I was surprised when I woke up this morning and saw the markets having stayed in this incredibly tight trading range overnight. Really remarkable, that type of stability in this market that we have seen lately. And that came in predominantly having been traded between value area high and point of control, which is a relatively tight trading range, again, based on the average true range for this market. Basically, that was well, let's just take a real quick look at the pricing on those levels. So this one is 87.5 and this is 80. So about a 7.5 point trading range. But you can see how as we began to approach the regular session, some buying came in. But just as we opened, the market started to come down. It's like, aha, gotcha. The bears just kind of started hitting the market for about the first hour and 15 minutes or so. And it was beginning to look like there was enough energy to begin to really take this thing down. And we didn't have a long way to go before we actually found our way not only to yesterday's low of the day, which was just beyond value area low, and by extension, the February lows. And everyone is still kind of looking to those February lows. Now, the February lows have kind of become this specter. And at some point, it's probably going to transition to a joke of sorts. And I am not trying to make light of this, but this February low thing has become almost like waiting for Godot. It's like, is it ever going to happen? Will Godot ever show? And he never did, by the way. So we may not get a true test of the February lows. Now, a couple other very important elements of today's trading, and we'll come back to this chart in just a second, but I do want to show you a chart. Oh, hello, I just did an oops. Let's go like that, much better. Hit the right minimize, not reduce. All right, so if we get that set up properly, so we can come back to this, and then do what I meant to do to begin with. I want to show you a chart of Amazon. That, of course, is one of my favorite stocks, as well you know. Well, yesterday, Amazon took a pretty deep dive to the downside, and it came in contact with the Fibonacci level of the 1618, the secondary target. We talked about that in yesterday's video. If you want a refresher, please feel free to watch that video. And I do have that video posted on YouTube. And if you do choose to watch it on YouTube, my YouTube channel is TradeAlerts.com. Please like the video and please subscribe to my YouTube video or my YouTube channel. I would very much appreciate that. Also, on the subject of comments and liking, if you're watching this on Facebook, please like and or comment on my videos. I'd appreciate not only the interaction, but it provides me with a little bit more viability as it relates to getting found on the social media platform. So anyway, yesterday the 1618 was hit like within 60 cents. Yesterday's low in Amazon was $13.55, and the 1618 weighs in at $13.55.64. So my statement at that point was, when price hits a secondary target, oftentimes it bounces up off of that target. That doesn't mean it won't retest it again, but oftentimes if it does, that usually is kind of a firmament of sorts that produces an up move in the stock. Or the index, depending on what market you're watching. Well, today, Amazon's low was $13.55.33. So it was 33 cents higher than yesterday, but still a little bit lower than 13.55.64, which is the actual 1618. Now, the bounce today, though, was magnificent. So again, the low of 13.55.33 and the close today of 13.92.05. So we have approximately a $37 bounce off of that retest of the 1618. It is my thesis at this point for Amazon that the stock will go higher from here, and I am positioned accordingly. I have long debit spreads, which are known as call debit spreads. I have purchased I had some previous debit spreads, but I bought some 1600, 1700 call debit spreads in the May contract. So again, I'm positioned for an up move. Now, the other thing I'm looking at, and this is another dynamic in the market that comes into play as a technical analysis component, and this is known as filling the gap. So 3 sessions ago, not including today, so that would be Monday, Thursday, Wednesday. So on Wednesday, when Amazon opened, it opened up much lower than it closed on Tuesday of last week. So what happens is so this is the close last Tuesday in Amazon, and this is the low last week on Tuesday in Amazon. This is the open on Wednesday of last week, and this is the high, which is actually the 100% symmetry support line. So in essence, what we have here is a gap between the two extremes of price between Tuesday and Wednesday. So this area in here is a gap. And if we're to look at this and give a dollar amount, we'll say that the low of the day for Tuesday, that's not right. The low of the day for Tuesday was 1482.32, and the high on Wednesday was 1455.90. So about a $27 gap. Now, markets have a natural affinity for filling gaps. So this market, in my opinion, is looking to go higher. When I say this market, I mean Amazon. I'm looking at Amazon to go higher, and I am looking for Amazon to fill the gap. Now, I am looking for that to happen as it moves towards its earnings report. and you can see this little blue circle with a question mark in it. That is the unconfirmed earnings date, which is April 26th. Now, unconfirmed basically means the company hasn't come out and said, yes, for sure, we will be reporting earnings after the close on April 26th. But this platform is very good about identifying and making available the earnings dates. So it's basically academic at this point. I'm pretty sure that Amazon will be reporting earnings on April 26th. So as we move from today, April 3rd, toward Amazon's earnings of April 26th, I believe that this market is going to begin moving higher. And I think it's going to close this gap, at least. Now, the other thing I want to show you on this chart is a technical indicator I use called the parabolic SAR. It's a technical indicator that kind of tracks the trend based on momentum, and you can see how this has just really gone to the downside. Well, when these dots that you see begin forming under price, that means that the stock has changed momentum and is beginning to move bullishly. That is what I am looking for to start happening, potentially even as this week progresses. So that's Amazon for me. So why did Amazon close where it closed today? That's the big story. But real quick, another technical component of the Amazon trade is the candlestick pattern here. This is a doji. A doji is classically indicative of indecision in a market, but the elements associated with the way that this candle has formed are very bullish. Again, that bounce off the 1618 at 1355.64, the close higher, and in relationship to yesterday's candle, it's formed what's called a bullish harami. Now, this candlestick configuration does need confirmation. So we do need to have a market that moves higher tomorrow for this to, in effect, be treated bullishly by market participants. So I am looking for a move higher, and I think the probabilities are in favor of Amazon moving higher in tomorrow's market. Now, we'll get to that. Why did Amazon go higher today after retesting that low? Well, we were kind of moving and grooving, like I said, kind of down and then up and then down and then kind of back and forth, chop, 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 a little bit up, then down again. And then all of a sudden, wham, the market just exploded to the upside. Well, there was a news story apparently submitted to the press by the White House saying that there would be no action taken against Amazon. The last several days, the president has been tweeting, dissing, trash talking Amazon and Jeff Bezos. He doesn't like Jeff Bezos because Jeff Bezos owns the Washington Post, and the Washington Post has been at the forefront of the Russian investigation. And so Trump wants to cause Bezos some pain, and the best way he could see fit to do that was to begin causing the stock to fall, which I have my opinions about that, but suffice it to say, in my opinion, as it relates to this, notwithstanding how I feel about the event in and of itself, I think this created one heck of a buying opportunity. And I think that there are fund managers and institutional investors and retail investors like myself who are looking at this and going, wait a minute, Amazon was trading over $1,600 a share not that long ago. Nothing fundamentally has changed. No analysts have come out and said anything about reducing or lowering price targets or issuing a different rating on the stock. All of the analysts associated with Amazon have been quiet. They've been conspicuously quiet. So as we look at Amazon and we see it struggling, we also look at Amazon and say, wow, when this thing turns around, it's going to make a bust a move to the upside. Well, today, I believe, was the very first effort in that move back to the upside. We bounced off the 1618. We closed positive. We made a bullish candlestick pattern, and we have a gap to fill as we enter earnings season. Now, all of that is conspiring for Amazon to be bullish. That doesn't mean it absolutely will happen. Never is anything ever for sure in the financial markets, but you have to have a thesis, and you got to base your thesis on the probabilities. And the probabilities have to be measured based on the metrics that you have available to you and how you have your trading plan established. I've just revealed to you what I'm looking at, why I feel it's bullish, and what I'm looking for in the upcoming days. So, with the S&P closing 32.5 points higher, the Dow closing 389 points higher, just another day in the financial markets, hundreds of points. The NASDAQ closing up 71 points, and the Russell 2000 closing up just under 20 points, which is a nice move for the Russell. We have the start or the potential start of a recovery from what we have been enduring over the last while. This market has been giving us, I guess I would say, some grief. So let's take a look at some Fibonacci's here. So, and what I'm going to do here is I need to move this off screen just for a second, just so that I can redevelop a chart here that I want to redevelop, and I will show you that. And it's the S&P, as always. Gotta love that S&P. And I will bring it back here in just a second. Hang on. I appreciate your patience. And we'll go ahead and we'll play with some Fibonacci's here, because as you know, Fibonacci's are one of my favorite ways of measuring markets, and we have some markets that need to be measured. So we've got this. That's not quite going to work out. We've got this move here, which is still in play. Now this is measuring the February low. This is a 100% symmetry support of the February low to this most recent swing high. So price is still kind of moving and grooving, playing around the 786 here, and we did close definitively above the 786, which is again a bullish dynamic. So and again, we do have a bullish harami associated with the candlestick pattern in the S&P. So it's more bullish than the Amazon bullish harami, but we are setting up bullish haramis now. So that's telling me that this market is beginning to set the stage for potentially going higher. Now, how much higher is it going to go? Right now, we are in a very interesting place with the markets. So what I'm going to do is take this measurement right here, which is going to give me it's not a target, but it's an overhead, it's an overhead price level that price will potentially gravitate toward, but find resistance at. And it happens to be at this gap fill right here. Yes, the S&P also has a gap fill, just like Amazon. And that's at 2708. Now, we're looking at today, 2614.72 is the price that we closed at in the S&P. 2708, whoa, that's almost 100 points higher. We're not going to do that in 1 or 2 days. Well, I suppose we could, given how much price action we've seen on a daily basis. But I think we could get there by the end of the week if the impetus in this market is finally to accept the fact that we've done what we need to do in order to move the market toward that February low and to get whatever angst this market is feeling out of its system so it can move higher. if we do get that, if we do get a follow through tomorrow to the upside, this is going to create a lot of short covering, which is going to drive this market a lot higher. And I am going to take one more measurement here. Actually, let me spread out price just a little bit so that I can provide a little bit clearer detail here. And that is going to be this short term. Let me get this, get that. And so price found the 50% retracement. Now, tomorrow, 26.2857 would be my, it's the 618, which is technically kind of a secondary retracement level. And I will go as far as to call it a target, but it's right there near the 618 support level. So price is going to hit some roadblocks tomorrow, but we need to see how it plays out. We need to see how it reacts, how it responds, how it moves. If there's enough sentiment and momentum in this market to bring it to and through those levels. And if there is, we could be looking at a market that is finally in a position to get its act together and get some higher prices going here. Today's action was weird. It was wonky. It was twitchy. It was choppy. And then, you know, that White House submitted statement really got the market off its lows, and we went higher. So at any rate, with that, I do want to just show you one last thing, and you probably already know what that is, and that is the VIX. The VIX got absolutely crushed today. So if we take a look at the daily chart of the VIX, it really popped to the downside today. And it's keeping in alignment with this sideways action that it's been part of. But we have to acknowledge that when the VIX goes lower, obviously the market goes higher. But the VIX is not only an indication of market volatility, it's an indication of market energy. And when volatility relaxes, market energy is inspired. The natural gravity of the financial markets is higher. So that is reinvigorated. There's a remembering of sorts that the market is meant to go higher ultimately. So this is what I'm looking at, what I'm looking for, what I'm looking to, what I'm looking at for the purposes of kind of establishing my thesis. And we'll see how it plays out tomorrow. But it was definitely an interesting day that could absolutely turn out to be an inflection point, a turning point in the financial markets. I know that's somewhat dramatic, but that's the financial markets. There is a lot of drama. But with that, I'd like to say trade safe, trade what you see, good night, and good trading.